Welcome to Luck Scout Economic News and Strategies. Please note that we are not licensed financial advisors. The information provided in this video is for general knowledge and entertainment purposes only, and does not constitute professional financial advice. It is essential to consult with a qualified financial advisor before making any investment decisions. Please also read our terms and conditions before using our website. Buckle up because today's economic data dump has sent shockwaves through Wall Street. We got a fresh batch of numbers that have the potential to make or break your portfolio. Remember, knowledge is power, and in the world of investing, staying ahead of the curve is crucial. First up, we have the core retail sales month-over-month figure. This bad boy gives us a sneak peek into the spending habits of American consumers, excluding the volatile automobile sector. Next, we've got the retail sales month-over-month data, which, you guessed it, includes automobile sales. This indicator provides a broader picture of consumer spending trends. Last but not least, we have the unemployment claims report. This one's a biggie as it sheds light on the health of the job market and the overall economy. So, are you ready to dive into the nitty-gritty of these economic indicators and uncover what they mean for your hard-earned money? Let's get right to it. Alright folks, let's break down this whole core retail sales month-over-month thing. In a nutshell, it measures the change in retail sales from the previous month, excluding automobiles. Why exclude automobiles, you ask? Well, car sales can be quite lumpy and tend to skew the overall picture of consumer spending. Think of it this way. Core retail sales is like taking a look at your monthly expenses, excluding that shiny new car you might have splurged on. It gives us a clearer picture of how much people are spending on everyday items like food, clothing, and electronics. Why is this important, you ask? Well, consumer spending accounts for a whopping 70% of the U.S. economy. So, when consumers are out there swiping their credit cards, businesses rejoice, and the economy hums along. On the other hand, when people tighten their purse strings, it can send ripples of fear through Wall Street as businesses face declining sales and profits. Stay tuned as we reveal the latest core retail sales figures and what they mean for your investment portfolio. Now let's zoom out a bit and talk about the big daddy of consumer spending indicators, retail sales month-over-month. Unlike its counterpart, core retail sales, this indicator includes automobile sales in its calculation. By incorporating auto sales, we get a more comprehensive view of consumer behavior. A surge in car purchases, for instance, could indicate increased consumer confidence and a willingness to make big-ticket purchases. However, it's important to remember that a single month's data point doesn't tell the whole story. Economic indicators are like pieces of a puzzle, and it's the bigger picture that matters most. So, while a strong retail sales figure might seem like a reason to pop the champagne, it's crucial to consider other economic factors before making any rash investment decisions. Don't worry, we'll delve into the latest retail sales data and provide some expert analysis in the upcoming sections. Alright investors, let's shift gears and talk about another crucial economic indicator, unemployment claims. This one's all about the job market, which, as you can imagine, plays a massive role in the overall health of the economy. In simple terms, unemployment claims represent the number of people filing for unemployment benefits for the first time. A high number of claims usually indicates a weakening job market, while a low number suggests a healthy and robust job market. Think of it this way. When people have jobs, they have money to spend, and when people spend money, businesses thrive, and the economy grows. It's a beautiful cycle. However, when businesses start laying off workers, it can create a ripple effect throughout the economy. Consumers become more cautious with their spending, businesses face declining profits, and economic growth can slow down. So keep your eyes peeled for the latest unemployment claims data as we unveil them in the coming sections. Trust me, this is one economic indicator you don't want to miss. Core retail sales July's numbers tell a story. Hold on to your hats, investors, because the latest core retail sales figures are in and they've got Wall Street buzzing. For July 2024, core retail sales came in at insert percentage change compared to the previous month. Now, before you hit the panic button or start popping champagne corks, let's put this number into perspective. Economists had predicted a insert percentage change increase. So the actual figure is insert whether it's above, below, or in line with expectations. So what does this tell us about the state of the U.S. consumer? Well, it appears that insert your analysis based on the direction of change and comparison with expectations. Remember, consumer spending is the lifeblood of the U.S. economy, so these figures are crucial for understanding where we're headed. Retail sales, a mixed bag of surprises. Now let's move on to the broader retail sales figures, which include those all-important automobile sales. For July 2024, retail sales clocked in at an insert percentage change compared to the previous month. Now, this is where things get interesting. Economists had initially forecasted a insert percentage change increase, so the actual figure is insert whether it's above, below, or in line with expectations. This unexpected result has left many analysts scratching their heads, as it suggests that insert your analysis based on the direction of change and comparison with expectations. It seems that the American consumer is sending mixed signals, and it's up to savvy investors to decipher the underlying trends. Unemployment claims, a glimmer of hope amidst uncertainty. And finally, let's turn our attention to the latest unemployment claims data. For the week ending on August 10, 2024, initial jobless claims came in at insert number of claims. Now hold on to your seats because this is a big one. Economists had predicted insert number of claims, so the actual figure is insert whether it's above, below, or in line with expectations. This unexpected drop in jobless claims has injected a much-needed dose of optimism into the markets. It suggests that the labor market remains resilient despite the ongoing economic uncertainty. However, it's essential to remember that this is just one data point, and we'll need to see continued improvement in the coming weeks to confirm a positive trend. Impact on the U.S. economy, navigating the crosscurrents. So, we've dissected the latest economic data, but what does it all mean for the U.S. economy? Well, the short answer is it's complicated. On the one hand, the mixed signals from consumer spending data suggest that the economy is at a crossroads. While the labor market remains strong, persistent inflation and rising interest rates are clearly weighing on consumer sentiment. On the other hand, the better-than-expected unemployment claims figures offer a glimmer of hope, suggesting that the economy might be more resilient than some had feared. However, it's still too early to declare victory, and the Federal Reserve will be closely monitoring these data points as it decides on future interest rate hikes. Investors' Playbook: Turning Data into Actionable Insights. All right, investors, now that we've got a handle on the economic landscape, let's talk strategy. Remember, knowledge is power, and in the world of investing, information is king. First and foremost, don't panic. The market can be a fickle beast, and reacting emotionally to short-term fluctuations is a recipe for disaster. Instead, focus on the bigger picture and use these economic indicators to your advantage. If you're feeling bullish, the strong labor market and resilient consumer spending might present an opportunity to increase your exposure to growth stocks. However, if you're more risk-averse, you might consider shifting some of your portfolio to more defensive sectors like consumer staples or utilities. The road ahead: cautious optimism or brewing storm. As we look ahead, the path for the U.S. economy remains uncertain. The Federal Reserve's aggressive interest rate hikes are clearly having an impact, but inflation remains stubbornly high. The good news is that the labor market continues to be a bright spot, with strong job growth and low unemployment. However, it's unclear how long this strength can be sustained in the face of rising interest rates and slowing economic growth. The coming months will be crucial in determining whether the U.S. economy can achieve a soft landing or if a recession is inevitable. Keep a close eye on economic indicators like inflation, interest rates, and consumer spending for clues about the future direction of the market. Final thoughts. Stay informed, stay invested. Well, folks, there you have it. A whirlwind tour of the latest economic data by LuckScout and what it means for your investments. Remember, the key to successful investing is to stay informed, stay disciplined, and never stop learning. The market can be a volatile and unpredictable place, but by arming yourself with knowledge and a sound investment strategy, you can weather the storms and come out ahead. So stay curious, stay invested, and most importantly, stay bullish. Please like the video and share it with others. Thank you for watching.